This video is on the technical analysis of capital and countries properties, and at this point in time we're on the monthly chart, and let's have a look and see what's happening in regards to the monthly chart. So on this particular chart we can see that the market had given us what seems to be an overextended W structure. It's an overextended W structure because that first leg of that W is much higher than the second leg. And another thing that's also very much interesting is that as much as we had the W structure over here, remember that whenever we have these W structures, what normally happens is that a lot of traders and investors buy on that second leg of the W and they place their stop losses just below, especially in as far as traders go. And this actually explains why we saw this candlestick over here. And what it is a bearish candlestick with a small body and quite a long lower wick. So what this tells us is that at this level over here we have a lot of liquidity stuck there, and at some point the market will head down to that level to grab that liquidity. Another thing that I also want to point out is that the reason why we have this candlestick is because, as I said, we had this very nice W structure and we had a lot of stop losses that were located in this region. Hence we saw this candlestick where we saw the market actually move further down to grab all of those stop losses, and at this point in time it seems as if the market will continue to move further up. Having said that, at this point in time, in my humble opinion, it is not yet safe to buy, and that is because, as I said, this candlestick over here is a liquidity candlestick and it's carrying a lot of liquidity at that point, and liquidity, as you guys know, is money that needs to be triggered by the market at one point or another. So I'm just going to mark this area over here, and just to reiterate, as much as we have that huge W structure, at this point in time, in my very humble opinion, it is not yet safe to buy, right? Because I believe that in the future we will see the market most likely move further down to grab all of that liquidity and then move further up, possibly, right? So if you're looking for any buying opportunities, in my humble opinion, I believe that we should look for those potential buying opportunities in and around this area. That's if price does indeed come down to this area to grab that liquidity, right? Having said that, we're not just going to buy by virtue of having price come back to this level. At this level, we're going to evaluate and see if we can find any potential buying opportunities. And I believe that should we find a buying opportunity at this point, our first take profit should be around this level here. Why do I say that level? That is because there's a very strong level of resistance at this point in time, and it may possibly also be the neckline of whatever W formation may form in the future, especially at this point over here. Can you guys see that, right? And our second take profit, in my humble opinion, should be around this level right there. That is because it's also a very strong level of resistance, as we've had multiple rejections at that point. I hope you guys can see that. Let's head down to the weekly chart and see what's happening. Let's have a look. And here we are on the weekly chart. So what do we see on the weekly chart? Just to recap, remember, on the monthly chart we spoke about how we had this huge W structure, and I said to you guys that a lot of traders and investors bought at this point and they placed their stop losses just below, right? Hence we had this candlestick over here. If you can just mark it, right? This candlestick was a stop hunt because there were a lot of stop losses that were located within this region, and as much as the market has triggered all of those stop losses, we also know that at this level we have a lot of money stuck there in the form of liquidity, and that in the future we will see the market most likely come back to this level to grab that liquidity and then move further up, right? Anyway, here we are on the weekly chart, and what do we see on the weekly chart? Let's just zoom in and see what else is happening here. Let's have a look. On the weekly chart we can see that we have another W structure, which is over here as well. It's also an overextended W structure because that first leg is much lower than this second leg, right? But don't confuse this W structure with that bigger W structure. If I can just zoom out, that I spoke about on the monthly chart, right? So at this point in time we're speaking about this smaller W structure over here, right? And what's happening right now, in as far as I'm concerned, is that a lot of people are still buying, right? A lot of people are still buying, and that is because they've seen this smaller W structure as well, and they anticipate that the market will at least meet that level, which is more or less where this smaller W structure started, and it's also a very strong level of resistance. And at this point, a lot of people will be taking profit. Having said that, just remember that I spoke about this area over here, and I said that we might potentially see the market actually move further down to around this area to grab that liquidity, right? Another thing that I also want to point out is that as much as we have this W structure, it has a neckline at that level, right? And the neckline, let me just clear the board. The neckline is also a very strong level of resistance. And what may possibly also happen is that we may see the market actually move further down from that level, right? A lot of traders are also waiting, or rather, a lot of traders and investors are also waiting for the market to actually close above that neckline, and then they will wait for the market again to test it. And at this point is where they will look for potential buying opportunities, and the first take profit will be this level, especially if the neckline aligns with any key numbers that we have on the Fibonacci retracement tool, right? But in as far as buying goes at this point in time, in conclusion, I would say it's not safe to buy, in my humble opinion. And the best thing is to wait for the market to head back to this level, in my very humble opinion again. And at this level is where we should be looking for those potential buying opportunities, right?